Hi guys, Reynaldo here. Now today I'm going to show you a trading tip secret that it's actually kind of not just fascinating, but it also works very well that you may be able to add into your trading. So for the past couple weeks, I've been mentioning to you regarding why I believe that the pound against the yen was a good time to buy. One is because it was in a level of demand. So if you notice around here we have a zoning of a demand area, and of the low of this guy right here there's a good support base. So being the support base at the low of 117.26, so this means that one big institution held this price after the trend to the downside, where a lot of sellers were just pushing the price, and being a downtrend, which is a series of lower lows, lower highs, momentum, stabilization, correction, continuation of that momentum, hence another stabilization. And this is the price where I got in at. Didn't get it pretty much on the best price, but at least the price that I bought in at was in between the zoning or the area of demand. Okay, now if I go through around this point too, so the other question that I get a lot from traders are target points, but there is one that I will share with you about the beauty and the secret of trends. Okay, if I click, we need to find pretty much in the past where was the highest of the high, where was the last high. So here it is, I determined the last high, and I use a tool called a downtrend line, which I chose snapping to the nearest point in this particular case. And now I'm going to put an extend line in the end, because I want to show you how the market actually really works in terms of determining areas where it can reach. So in this particular case, we call this, or I call this, a primary downtrend. Primary being one of the major on the trend line based on the time frame from November 30th till the current one, current dates. When there's a primary, it will also form what we call a secondary downtrend. So I'll snap into that. I'm going to do an extend line one more time as well, so you can see it. So the future here doesn't exist, right? This is where things create in terms of the uncertainty. Part of the uncertainty will be fear, and part of that fear, either you will experience fear of execution, fear of missing out, fear of losing, all the type of stuff. Why? Because of the uncertainty events. It's the future that we can't control. Not even a single person out there that will be able to detect what's really happening. Okay, not even institutions, probably with the exception of Goldman Sachs, since I believe they're the ones who control the marketplace anyway. But for normal retail traders like you and I, it's always going to be the future that we can't control. Hence why there's a lot of traders who will like to find out the holy grail and what really is the trick to trading. Technically speaking, seriously, if you would know the basic foundation of technical analysis and looking more on the third dimension, not just on the two dimension of things in terms of technical analysis, this is where you can understand more and you can see more clearly, and in actual fact the chart will be talking to you like music. Okay, so from here what happens next? Well, if you can see through here, and if this one didn't exist, at one point in time it will meet to a certain point of reference. See, now notice here that the low didn't want to go below this low. That's why I put my stop loss in there, because if this being now then really low, and at the end buyers push the price all the way up to create an uncertainty, hence a doji, and if it continues to drop further within this low, then the continuation of the downtrend will occur. Okay, let's go through here. And notice now with the high of this just hit on where the secondary downtrend pretty much where it touched or where it formed. Secondary downtrend. Okay, where to from here? Through what we call the law's harmonic vibration. When something gets trapped, it has to make a choice whether to break out within that trap to go to the upside or continuation to the downside. Okay, one is that yes, he's in a downtrend. And there's a probability that it may continue to drop. However, I showed to you guys earlier that it's the lowest it's ever been pretty much since 2008, 2010. And if you go through the past, it's nothing really much, but other than that, this is the lowest it's ever been in terms of a level of demand. At the same time, if you notice, there are a lot of buyers supporting this area, this price at 117.60, 117.50, and now the market's giving signs, if you notice here too, that the lows are higher compared to the previous lows. And we create a new high, so there is some form of a test and measuring as far as we're concerned. Institutions are already buying around these levels right here. Okay, while people who are fearful or currently who has a view that the pound will drop further, they're also selling. Okay, let's go through the next one. Boom. Beautiful breakout to the upside. Lows are higher compared to the previous lows. And now the thing that we couldn't see when we bought it on this side, which is now the future, shows much a clearer point of reference. One point in time, the primary downtrend needs to be touched. It could be in 1 day, 2 days, it could be in a week, it could be in whatever, depending on what the market will do. It's not up to us who can determine where the market can go. It is up to the marketplace. Okay, let's go through to the next one. Boom. If you notice, because of the momentum to the upside, there are more buyers than sellers, there are a lot of demand, and hence push the price all the way up. And if you notice, the high of it just hit exactly on the primary downtrend. So the next question is here is, well, after good 2 days of strength in the momentum, there's going some form of stabilization in place or even a continuation of the momentum to the upside. Odds and probability that the primary downtrend will be broken. Once this primary downtrend will be broken, then you have a free ride to go all the way up to 123. And this is where we can look at other advanced technical techniques to see on up to where the pound can go to. Alright, other than that, that is a trading technique for the day, using the secrets of trends and just believing in it. And at the same time, whilst this is currently the current price, see here, there's another where the future lies. If this one doesn't want to break to go to the upside, it can come back down all the way to fill in around this point. Or if this one gets broken, then now you have we're going to create a new high, higher low, higher high, then that means now the downtrend is over. If this one gets broken, a new high, then new higher low, a new low will form, higher high, higher low, higher high. Okay, and now being in a stop loss around this point, since we're majorly up more than 100 and odd something pips, I can now at least put my stop just below of this bar right here, and at least now it's on a free ride and a free and clear that regardless of whatever happens in the marketplace, even if it drops around here, I'm still in a profit. Alright, this is it for me. Thanks for listening. I hope you enjoyed that. Take care till next time. Happy trading.